Next, we are joined by Andrew Sorensen,
the CEO of WA Kaolin, a company focused on its Wickepin Kaolin Project, which is 220 kilometres southeast of Perth. To tell us more, I will hand you over to Andrew.
Good morning, Jane.
Good morning. I'll let you jump into your presentation.
All right, thanks very much. Let's get started. Well, thanks for letting me present today. I'd just like to introduce our company, WA Kaolin. We are the owners of a high purity kaolin resource in the town of Wickepin. Here's an important notice and disclaimer for everyone to read at their leisure. I just want to start by giving a quick overview of the business. The kaolin business, which is not well known traditionally in the Australian ASX space, so I'll just talk about it a little bit. It's a huge market. It's growing strongly, and our resource is one of the largest known remaining resources in the world, and we have a ore reserve estimate of 30.5 million tonnes of kaolinised granite, which is delivering a 31-year mine life. In addition to that, we have access to another 644 million tonnes of resources in our retention tenements. We've owned this project since 1999 when we purchased the tenements from Rio Tinto, and we've invested $42 million since that date on developing both the technology and the market ready for this expansion that we're doing at the moment. Our production technology is a dry processing technology, which has a very low cost compared to those who are using conventional wet bleaching and magnetic separation processes. And the offshoot of the long tenure that we've had with the project and the amount of money we've invested is that we've developed the market significantly so that we have long-term offtake agreements and letters of intent with customers who are all sitting there ready to take production from us when we start up towards the end of this year. The kaolin mining is simple. It extends laterally across the surface, so we have about 5 metres of overburden and between 20 to 40 metres of ore. There's no drilling and blasting. It's a very straightforward and low-cost mining operation with a low strip ratio. We completed a definitive feasibility study last year, and that showed very robust economics based on a two-stage production. So the first stage of 200,000 tonnes starting up this year, and another 200,000 tonnes taking it to 400,000 tonnes within 3 years. It showed a very strong NPV of $257 million. The capex for the first stage of production, which we're currently constructing out at Wickepin, is circa $18 million. And the second expansion will cost around $14 million when we do that in a few years' time. Part of our strategy is to do this staged ramp up so that we add capacity in these 200,000 tonne modules to basically match the growth of our capacity with our penetration into the market and deliver a low risk strategy. And we have the team on board to deliver the project, both in terms of the executive and the board team. The project itself is located in Wickepin. The Wickepin, as you can see there in the map, it's about 220 kilometres from Perth in a southeasterly direction. The town of Wickepin is about 15 minutes drive from where the pit is located. And this is a very convenient location in terms of we have access to power, water, road, rail, and staffing for the project. So it's a very convenient location. As I mentioned, the resource is huge, and I think it's a very good project in terms of the life of mine. 31 years in our ore reserve estimate, and greater than that, access to significantly increase that when we start looking at the rest of the resources in the inventory. And just take a look at the size of the resource when we compare it with other global players. Imerys is a listed conglomerate, and they are the largest participant in the kaolin market globally. They have about 16% global market share. And as you can see there, our resources are in our single deposit is more than their resources across all of their holdings. So, and then you look at the other participants, came in BASF and Thiel, all private companies. They also have those resources that you can see there. Just talking about kaolin and its properties very quickly, it's a platey white clay material, and it's used in the ceramics industry, the fiberglass industry, paint and coatings, paper industry, and it's also used as a feedstock for HPA, and some of the other ASX participants are focusing on the HPA aspect of the kaolinite. Just looking at the traditional kaolin market, it's about a $5 billion US market, and you can see it's made up of those industries that I mentioned before, and you can see the relative size of them on the left-hand side. In terms of the regions, Asia Pacific is the largest market for kaolin at $1.7 billion, and it's also the fastest growing across the world. Just looking at the breakdown of revenue by application, you can see that the paper is the largest portion, and then followed by ceramics, paint and coatings, fiberglass and rubber. Then when we look at by region on the right-hand side, you can see that China is the largest region, followed by Japan and Thailand, Vietnam, and other Asia Pacific nations. This is just focusing in on APAC. We are an existing business. We've owned this resource, as I mentioned earlier, since 1999, and we've been in production from our Kwinana site, which is a suburb of Perth, since 2016. And we have a 5-tonne per hour plant operating in Kwinana, and these are the customers that we're servicing from that plant. There's fiberglass customer, ceramics customers, soil treatment, building products, paint and coatings, as well as other kaolin producers are all our customers. And you can see the relative size of those customers based on that chart. And the important thing is that a number of these customers have executed agreements with us. The first of all is a Taiwanese distributor who's got a 10-year distribution agreement, which contains a 6-year offtake agreement. And the sum of that 6-year offtake agreement is 432,000 tonnes over that 6 years. That's a good baseline load for this plant. Remember, we are building a 200,000 tonne per annum plant to begin with, and we're planning to expand that to 400,000 tonnes after 3 years. When you take this offtake agreement with other letters of intent that we have from our other customers, we've got 83% of the production for this facility, the first 3 years sold across those agreements. We completed a definitive feasibility study, and this focused on the 200,000 tonnes for the first 3 years, and then followed by 400,000 tonne capacity added in the 3rd year through to the end of the study. That's a 31-year life of mine, and the economics around this were quite robust in that we had an NPV7 of $257 million. And what's important to note here is that this study capped out at 400,000 tonnes per annum. Based on the size of the resource and the size of the market, we can continue to add 200,000 tonne per annum modules as we go along and further into the. So I would regard this as a conservative look at our business. And here's the DFS outcomes in terms of just a summary chart. I guess the key headlines here are the $256 million NPV, the average sales, as you can see there, is about $100 million. The average EBITDA across the project is $29 million per year. Now, just sort of giving you an update on how we're going. As I mentioned, we are running the plant here at Kwinana at the moment, and at the same time, we're constructing the first 200,000 tonne plant. These are photos that were taken about a week ago when I was on site. As you can see, the building is well underway with the roofing section completed across the tall sections of the building. The building here in these tall sections is where the processing plant is going. So we've prioritised that area of the building so that we can start putting in the processing equipment. And then the low section of the building, which you can see, that's about 120 metres long. That is the warehouse area, which is the last section of the building that we're constructing. This is the project plan, so it gives you an idea of how the project is tracking. I've just noted there at the top that when the pre-IPO funds came in August of last year, and then the IPO was executed in November, and then you can see we've been doing the civil works, sourcing the silos, the bagging equipment, and the kiln. The kiln that dries the ore is the single largest piece of equipment and also the longest lead time. So that was the first thing that we ordered. And we're moving forward with our mechanical, structural, electrical services and lighting and small power. And this is all scheduled to complete in July so that the commissioning of the plant can start in August, and we'll be delivering the plant at full production in November. And I mentioned this is just the first stage. So our current operations at 5 tonnes an hour. What I just showed you was the building program for the first 200,000 tonne capacity stage, which will be completed this year in 2021. That's 25 tonnes per hour. And then we're looking to add another 200,000 tonne module, which will take us up to 50 tonnes an hour. And that will be in 3 years' time. And then we can continue to add on modules as we penetrate the market. Just talking about a corporate overview shortly. The top 20 shareholders hold 67% of the stock. Owners and board have 38% of the stock. We have 1,450 shareholders. A year ago, before the IPO, we had 3 shareholders. So that's been a big increase for us. There are 283 million shares on issue, putting our market cap around 50 million. We have some unlisted options and performance rights, and we had $16.7 million cash as at the end of February. Just wanted to talk through the balance sheet here. The balance sheet, this is audited balance sheet that we released with our half-yearly report. You can see the 30th of June was prior to the IPO and conversion of convertible notes, so there's quite a bit of debt in there. The December accounts include some non-cash expenses, which were part of the process of converting those IPO proceeds and conversion of the notes. As you can see, the company is cashed up and has the balance sheet to conclude the Wickepin project and increase the production and sales of our K99 kaolin products. I'm just presenting to you a little bit of information about the board here. We have John White as our chair. John is ex-global chief of Visy Industries and has been the CEO of several publicly listed companies. You have myself. Alf Baker is one of my fellow founders. He has extensive experience in building businesses. We've added Linton as a mining engineer and with lots of experience. And Kathy Moises is previously an analyst for Patterson Securities and has had prominent positions with Merrill Lynch, Citigroup and Evans Partners and others. And Michael Kenyon is our CEO. Michael's a Bachelor of Business and Chartered Accountant. He's had CFO roles with various ASX listed companies, and he's a safe set of hands to help us on all of the compliance aspects of being a publicly listed company. I'm happy to take any questions.
Well, thanks for that presentation, Andrew. We've run slightly over, so I'll just jump into one of the questions that's come through. Does the company have scope to explore HPA and/or haliocyte applications in the future?
So we do not have any hallocyte in our resource. So in terms of hallocyte, we not have hallocyte within our resource. In terms of HPA, our product is ideally suited to the HPA application. So you'll find that once we see that market is a viable market for Australia, we'll be following in based on the quality of our ore body.
Well, thanks for that today. We have taken some notes on the other questions that came through, so we'll get you to answer those directly to the investors. But thank you for joining us today, Andrew.